Hello my fellow freedom builders and welcome back to the channel. Today's video is a quick little how-to step-by-step video because many of you have asked me when I do my stock of the day video how I choose the individual stocks, why I'm not just choosing all of them but why I only choose some of them. And that spurred me to make this little video where I'll try to go through my process when I am in here looking for stocks. And first of all, when I go into MyStockScanner, as you know, we have the watch lists here. We also have portfolios, we have screeners. But normally I have a couple of watch lists that I go through and that could be interesting swing trading candidates or stocks that I am thinking about putting on an option position on. It could be a credit spread, a cash secured put, something like that. When I have done that, just quickly looked at the stocks, I might do some screens. As you know, we have a lot of screens in here. But let me just give you an example of when I'm looking at a stock, what I'm looking at, how I am approaching it. First of all, we go into the main page here, and the first thing that springs to my eye is this magnificent green area up here. Of course, it's not always green. It is because this D.R. Horton here is a stock that has a very good value measured from our value score. Extremely good quality. We'll have a look at that just in a second, and the momentum is actually great. So the overall stock score is 98, which means that measuring all the US stocks we have in the system, D.R. Horton here is actually better than 98% of all the stocks we have there, which tells me this is a fairly good place to start. Now what we do in MyStockScanner is basically we try to help you find what to buy, and we try and help you figure out when to buy it. Of course, we cannot tell you what to buy and exactly when to buy, but we can give you some tools so it'll be a lot easier. Now, if I'm making an option trade, for instance, normally I don't want to stay in over the next earnings report. So I'm just checking out the next reporting time, reporting date, and so on here. I also run through this area here to see, okay, what sort of price earning are we having? 10.6 doesn't seem like too high, but it's not. We cannot really decide if we want to buy the stock just from the price earning, or at least I can't with the strategies I use. Price to book, I don't usually look too much at that, but price to free cash flow is definitely something I am watching. And here I'm paying $12.20 for each $1 of free cash flow that this stock produces, which is actually magnificent. That gives me a so-called cash flow yield at around 8%, which is very good. Price to sale, I normally don't look too much at, except if it's a smaller stock, maybe a tech stock that doesn't make too much on the bottom line, then that can be a decent idea. Quality is definitely something I'm looking at. I look at return on capital and return on equity. I also try to have a look at the different numbers over here, how they develop. That could be the price earning ratio. Is that going up or down? What about the earnings per share from year to year? Is that growing? And right here you can see that the estimates for 24 and 25 is not that great. Minus 0.2% for 24 and 9.3% for 25. And you might say to yourself, is this really an interesting stock to buy into? And I'm going to show you why it actually can be. So what else are we looking at? Well, the return on capital employed here is something I want to see is fairly steady. It doesn't have to go up in a straight line, but as you can see here, it is the worst year is back in 19, where it made 14.5% in return on capital employed. And then it has been going up, a bit down again, but it is in this 15, 20, sometimes almost 30% range, which is extremely good. Of course, we don't want to see a trend where it just starts to slip down towards zero, but again, that is something we'll look out for. Interest coverage in this time where the interest rate is going up is an interesting number to look at as well, because it tells you how many times over they can pay their interest with the earnings they have. I should say that all of these numbers we are putting into a lot of teaching modules, educational modules that is coming up on MyStockScanner for members and also some of them for non-paying members. So don't be too discouraged about all the different lingo I'm using here. That is something we will educate you in. So I'm looking at the overall picture here and I'm seeing a fairly decent stock. Now this company health, this Petrosky F-score is also a thing we'll make some educational material on. But it is basically a 9-point schedule where we are, or the software is checking out how many out of 9 points is it actually fulfilling. And here it's 6, it's fairly good. The Altman C score is a measurement of how likely it is for the stock to, or the company to go bankrupt. And here we can see DR Horton is basically as safe as they get. And here we can see the analyst estimates. Where are they on average? And they are somewhere between buy and strong buy. So basically we have a decent stock here that it doesn't seem like it is just about to go under. Now, when we go into the valuation chart, because that is my next tool here, I should use the price earning and just saying, all right, it is around 10, 11, maybe 12. We need to put these numbers in just in a second. So I go into the valuation chart. And in here, and I should say I actually bought this stock a while back down here around 130, where it showed even better value. Because now the analyst estimates have been put in here. Let's just bump this down to 2 years here and then 10 here. Because as you can see here, if they grow by 0.9% this year and 9.3% next year and have a price earning around 10, it could be 11, it could be 9, but let's just say if it is at 10, then the next 2 years would yield us next to nothing. However, we should remember that when I bought this at around 130, and I'll show you in a second why I bought it there, I think it was 128.90 or something like that I bought it in. This actually showed that there was quite a good upside over the next couple of years from around 130 and up towards 150, 55 at least. So that was a very decent upside there was to it. Because if we're looking at it right now, we could see, okay, if the estimates hold through and we have a price earning at 10, well, then there would not be much earnings in there. And then, as you know, I don't trust the analysts too much. So let's say that they had an earning. Let's just remove this one. So we don't use the analyst estimates. And then let's say they were only making 3% per year over the next 2 years. When I remove this analyst estimates, it just means that the analyst estimates are taken completely out of the calculation here, and each year will have an average of what I'm putting into it here. So if, for instance, they do worse than the analyst's estimates, then if I put 3% in here and they keep, let's say, a 10 in price earning, well, then in a couple of years we would be lucky with just about a break even. If the price earning drops, if it drops to, for instance, 8, then we will see a drop of 20%. So that was where I was sitting here at around 128, 29-ish here and saying, okay, this could be a break even even if the numbers were a bit worse than expected, so I bought it at that point. Right now, I actually think it has gone up a bit too far. I might not, I wouldn't have bought it right now. There would simply be too little of an upside into it. But let's have a look at why I actually bought it, because this was for my a bit more longer term portfolio where I also use options on. So I went into the TPI chart. And this was here in November, I think it was around here. Yes, this was just about just below 130 here. And what I looked at was basically that we had a long-term green uptrend down here. At the point where I bought it, we also had a weekly uptrend here. Now with our new colors, we can see, okay, it was actually in an overbought accumulation zone. but I'm fairly certain that the days I bought it was just around here, where we actually had a triple green here. We actually had a couple of them, but I'm quite certain I bought it here around the 17th. And then it dipped down a few percentage points here, and then it took off. So that is how I use this. I look at the summary. I make sure that there's no really big dark things hiding in here. Of course there can be, but we can also go into the fundamentals, look at income statement, cash flow, and balance sheet if we want to. I rarely do that. I actually, when I'm looking at stocks, I'm mainly looking at S&P 500, NASDAQ stocks, maybe a bit below, and these stocks are fairly well analyzed, so that if I can see the numbers are checking out here, I normally don't have to go too much deeper into it. It's more if you're looking at some very small tech stock of a small cap, micro cap, something like that, that you might have to do a bit more digging yourself. There's not as many analysts doing the work for you here. So after this, after I have checked out the main numbers here, I go into valuation. I try to put in the analysts' estimates here, and I try to make it worse. I try to take off 10, 20, 30% of the growth in earnings per share. I try to cut down the price earning by 10, 20, 30%. And if I still have a decent setup, then this could actually be something. All right, and then finally, I'm looking at the TPI chart and just making sure that we get the setup that we want. We have some very good stats. If you have seen our webinars, you know that buying something in a very good green uptrend with, for instance, here, now we were not in an uptrend here, but let's say we have been in an uptrend here and we got a green weekly uptrend in an oversold accumulation phase, then that is definitely a good place to start looking for an entry. So as I said, what we are trying to do with this tool is giving you the bigger picture, the summary here, to make sure that you're actually looking at a decent company. It's not just about to go bankrupt. Then the valuation, we are saying, okay, is there an upside, at least from the current price level to what the analysts think, and what if they are wrong? What if we make it a lot worse than that? Can we still make money? And then finally, we are timing it here. So we are trying to figure out what to buy, what the upside is, and when to enter. I hope this made sense. Otherwise, please feel free to ask your questions. Put them in the comment section below, down here, or write us in on our Facebook groups, or wherever you find our videos. That's all for now. Take care of yourself and your money out there, and I'll speak to you again shortly. Bye.